for you today here are just 3 proven strategies that will work pretty much in any business. And whether you read one book or another, you're going to find a commonality of these structures in the material that you're going to read. So I can save you a lot of time and give them to you, but I caution you now, the chainsaw on the tree was exciting. The rest is hard work, okay? So who would like to learn some basic hard work strategies that really work? Okay. So the first thing, that I have here is number 1, we're going to do a repeatable monthly schedule. Repeatable monthly schedule. So let's pretend you are a contractor, okay? Now, you can see down the bottom here, I have week 1, I have week 2, I have week 3, I have week 4. Okay. So if I'm a contractor and I gotta get my guys started every day, I'm not huge yet, but I'm not super small. So I don't have enough guys that I can stay in the office all the time, but I'm not on the tools all day either. Okay, I've gone into that realm where I'm no longer a solopreneur. I'm a real entrepreneur. I got a team. I'm starting to build it. Okay. I see a supplier stop at 7 a.m. 7 a.m. Not 8, not 9. And there's a reason for that. So, you know, there's a couple contractors in the room, and if they know you're coming every day at 7 a.m. and there's no one else in front of you, will your order be late? Or if you push it that you're the 5th order and they think you're coming, you know, sometime between 8:30 and 11, you know, they're going to push it over. So 7 a.m. is that supplier visit. Okay? And you also know it's the only supplier visit on the table here. He's not going back. This guy is not going back to the supplier each and every day. Then at 8:30 a.m., he's going to do job site visit number 1. So job site visit number 1. Now, if you have a team and you have more than one job site, here's another move that you'll have to do, or any business where you have multiple locations and you have to check on them. Schedule them at the first section of the day, okay? And do not tell them which one you're going to see first. So when you show up there at 8:30 in the morning, you will know which one, who's on time, who's not on time. These are guys that are on your payroll now. Remember, we can't outsource to India anymore for $2 an hour on what we're doing here. We're trying to run a plumbing company or electrical company or landscaping company or you know, designer, it doesn't matter, anything where there's a site visit here. Then we're going to go to job site number 2. Okay. Now, things have changed since I started in business. You'll see in here, I have a marketing content at 11 a.m., pretty much Monday through Thursday. Now, when I started my entrepreneurial journey, marketing was so much simpler. So you had the yellow pages, and it was this much for a bold ad, and it was this much for a quarter, you know, little square. It was this much for a half a page. It was this much for a full page. Now we have so many options, and they are not the yellow pages, and they are hard to understand. But you will need content. You will need content. 100% you will need content, and that's something you can do. You know, if you do have a location-based business, you're going to be wanting to do that out on sites where you're looking at real projects. So you're going to need to do that content, and it's going to have a meaningful place in your business, or when you get to the estimate at the end of the day, the phone is not going to ring and you are not going to have an estimate. So we have that. Now I have at noon, return phone calls and clear email. So my guys know this a lot because I preach it on them all the time. We even have set hours where we're undistracted. Gary Keller writes about it really masterfully. Do you know it takes up to 23 minutes to get to your highest intellectual capacity once you've been interrupted? And the average person is getting interrupted 80 plus times a day. So having a time to actually return phone calls and clear email is a fantastic opportunity. And I'll clear one up on email right now too. I've been selling my life in increments of 15 minutes for a decade, until we switched to the monthly flat fee billing. If you have any discussion with a human being that has to happen, and there is any sort of back and forth required, do not send an email. Pick up the phone, discuss it. Use email to confirm what's been discussed afterwards. It is infinitely quicker. So if you do have that email, and you know for sure when you send out that email it's going to elicit the discussion, pick up the phone, work it out, and actually get to the resolution and move forward. So we have that actually blocked in our day. Now, you're going to have to administer the business. You're going to have to meet with your banker, you're going to have to meet with your lawyer, you might hire a marketing agency. That's going to have to be real time that's scheduled into your business. Okay? Now, at 6 p.m., I have estimate number 1. I'm at 6 p.m. Does anyone see what this looks like here? What time did this guy start in the morning? 7? Matt, you do plumbing estimates. How long are they going to take you?
Half hour to an hour and a half.
What time are you getting home on this one? 8. That's going to work. And if you want to start a business and you're looking for, that you watched a video on YouTube and it was 2 hours a week and work from the beach someday, not from day one. Okay, that's not going to happen. So if this schedule is starting to look scary for you, you might want to polish that resume and work somewhere first, because it's not for everybody. And that's part of the key. The strategies that can be taught, but sometimes the strategy isn't what we're seeing. And it's not that you can't do the power moves after, but you better learn the basics. Okay? And hard work is definitely one of the basics. Okay, so now I'll point out the different differences. He's visiting the job sites. He or she is visiting job sites 1 and 2 all week, okay? Except for Friday. I got a good networking block there in Friday for the guys. Networking is something you're going to have to do. Whether you have a networking group or you're meeting with other tradespeople or meeting with builders or in any industry, there are similar services that are going to be able to refer to each other. And building those networks is going to be very important, especially initially. You can move to more automated marketing streams eventually. It's difficult to do because it's difficult to build that relationship before you have that significant credibility. And you'll gain that credibility one-on-one probably a little quicker and be able to leverage that. Okay, now this guy here has some more estimate slots here. At the end of the week, he has 10 estimate slots. He has 2 days on the tools. That's what we can have. Now we also have, right at the end here, this one is missed, and it's missed a lot. I have staff meetings in HR. And everyone talks about, I'm going to start a business, and we're going to have a great culture. Has anybody ever said that to themselves? I'm going to start a business, and we're going to have a great culture. Now, a great culture doesn't happen by accident. It doesn't happen because you want it to. A great culture happens because you put it on the calendar and you meet with your team. And it gets real when all of a sudden you're paying those team members and you actually got to meet with them, pay them, and have something to say to them. Okay? There's a couple of tripping points I can have. What are we going to say? Do I actually want to pay someone their hourly rate to sit around and talk when I could be out generating revenue? That's that balance. And if you don't do it, weekly, you're not going to build a better culture. Monthly would probably be the threshold in just maintaining. If you want to make any sort of incremental improvement, weekly is the threshold to make that happen. Now we're going to recruit. If you want to be a business owner, recruiting is part of your life. You will not have the same employees with you for 10 years. So people are going to turn over, people will move, they'll get married, they'll move away, they'll start their own businesses. A lot of businesses are based around guys, completing programs. In our business, you got to complete the CPA program. In most trades, you've got to, start out and become your journeyman career, and that doesn't work out for everybody. People will kind of flunk out of the program. So you have to always be recruiting. When you need someone, it is too late. If you already need an employee, it is too late to start recruiting. You've now made a detrimental impact on your business. Okay. Now, on Saturday, it says rate checklist. Now here's where the winners are separated from the losers. Is when we talk about rate checklist, we're going to have to start writing the systems and processes for our business to improve them. Okay, you are the expert in your field. You won it out in business because you were the supreme technician, and now you have to find a way to download what's in your head so your guys can execute that in whatever form of business you have. You can have a doctor's office, or you can be a plumber. You're going to need to be writing checklists if you want things to happen the way they're going to happen. Again, we're going to return phone calls, and we're going to go S9 and 10. There's a couple other variations as we get past here. They're not hugely unique. Some people will say repeatable daily schedule. There's some people, guys out there who say repeatable weekly schedule. I prefer the monthly, but you're going to get the consistent message that they have a repeatable schedule, that they know what's happening at what time, and that's how they do their business. This week 2 is a little bit different. You're probably going to have to run your payroll and accounting. Everything else is, very similar to that. Okay. A couple of the other keys here. Week 3, we're replacing writing the checklist with reviewing the financials, and that's going to be something you can do. I think the repeatable monthly schedule actually frees up your time a lot more, because there's some things that I think are a little bit of a waste if you do them daily or weekly. They're better off monthly, but it's that repeatable monthly schedule that's going to get you going in the right direction. Now, that's counterintuitive to what you see on TV as an entrepreneur, some guy answering his phone and drinking a coffee and running here, and he's quote unquote multitasking. There's an overwhelming amount of research that multitasking reduces your performance, that it just takes longer to complete goals. And really, the people who think they are good multitaskers, here's the best piece of evidence. The people who think they are good multitaskers actually statistically will test worse on multitasking tasks than the people who say I'm not a good multitasker. So if you're thinking you're a good multitasker, beware. It's probably not the case. So this is, kind of power move number 1, help you beat the odds. You gotta have a repeatable, monthly schedule. And it's gonna become a little bit evidence why this is so important. Why does the CPA care about schedule and time management so much? So, it'll start to come together a little more when I go to planning. So we're gonna go planning. So now you're starting a business. Now, what you actually have to do when you're starting a business or running a business, you need to know your personal budget. Your personal budget is going to drive what you need from the business, what's available to put into the business. The leaner you can live, the more likely you are for your business to succeed. If you have a $5,000 a month mortgage payment, that's one thing. But if you're renting a $1,000 a month place, your business, you don't need a lot from your business initially. You're less likely to run out of cash. Okay? So this guy's living pretty lean. He's got mortgage or rent of $1,200. He's got utilities of $300. He's got a car payment of $400. Student loans are other $100. He's got total fixed expenses of $2,000. Do not make budgeting complex. Anyone ever downloaded like a personal financial planning app like Mint or something like that and let you put like 9,000 categories in there? Replace them with 2. Fixed and variable. Fixed and variable. It's all you need. All you need to know is what are your fixed personal expenses, the stuff that you can't get out of, the stuff that's pretty regular every month. That's your fixed. If you can make a move to eliminate one of those, great. That's going to increase the chances of success for your business. Then you want a reasonable variable expense budget. Food, entertainment, clothes, etc. Breaking those down in micro components is a ridiculous waste of time as a business owner. Again, the one limiting factor for all businesses, whether you have $0 or whether you have $10 million, is 168. That is the number of hours in a week. You have 168 hours in a week. Trying to classify your Tim Hortons away from your toothpaste is not going to help you succeed in business. It's not a material item. So fixed, variable, but know what this is. This is what I need for my business every month so I can live, so I can pay my bills while I'm trying to grow this thing. Also, what you're gonna need is your personal balance sheet. You know, the value of the real estate, the cash, RSP, TFSAs, we have assets. This guy has assets of $320,000. He's got a mortgage of $200,000, a car loan of $25,000, credit limit. He's got a limit of 40 and a balance of 10. That's important. Personal lines of credit are, you know, a good move on, you know, building a business. I once upon a time started a CPA firm with $0 and a $40,000 line of credit, and you know now I have 10 employees. So if you can secure a personal line of credit, great idea. Credit card debt is not so bad. So why is this so important to a business? Is because when I'm helping an entrepreneur to plan, I need to know what needs to come out of the business and what level of risk they have on the personal side. So if I see someone with a $500,000 mortgage and they got $250,000 worth of student debt, I'm going to put them in an entirely different risk profile than someone, you know, with a reasonable debt or no debt. Okay, so your personal balance sheet is going to guide your decision making, and trying to make business decisions in a vacuum from your personal financial situation is a huge error. Okay, you need to gauge that level of risk by the amount of risk and leverage that you have on the other side, and what you need in costs as well. Maybe it's not time to start. You do not want to be one who runs out of cash. Reason number 2. Okay. Now, once we know that, we can help you actually plan. So if you ever are meeting with a CPA and they don't want to know what your personal budget is, and they don't want to know what's happening on your personal balance sheet, they're not prepared to tax plan. They're prepared to, here's your financial statements, here's your tax return, I hope you're still in business next year so I can charge you again. And that's really not going to help you that much. So if they don't start drilling into this, you know, when people come to our office, we have a 30-page document that we go through in the first meeting of what could be on the table. But you need to gather this, make sure it gets in front of somebody who's helping you plan on taxes. The average business owner who just starts out, say they're only going to make $50,000 a year, they think they don't need tax planning. I don't need any tax planning, it's fine. Guess what? Tax is your single biggest expense of your entire life. It's going to dwarf your house and your cars several times over. Just $50,000 worth of business income is approximately, with inefficient tax planning, what, $12,500. Efficient tax planning with $50,000 worth of business income, usually around $7,500. That's the entire cost of a good CPA. So if you're trying to do that to save money, if you want to be Mr. T4 tax, you know, you might end up like my tree who had to make a sacrifice here today. So now, once we get down that personal financial planning, we can start getting into the business planning. What you need to establish is what sort of business you're in. Am I baking bread in a bakery? Am I building houses? Am I doing design? What is it? And what's my likely average transaction size? It's usually a transaction, project, or a customer. Now, here's where people can go off the rails. Imagine you have a restaurant and you have 40 items that is on your menu. And you're trying to do a business plan based on each item on that menu. How many onion rings am I going to sell? The problem is that as small business owners, you're not McDonald's. You don't have enough data. Even if you can actually calculate the number of what it was last year, it's not a big enough sample size to be reliable. What you actually need is your average transaction size. So that restaurant owner doesn't need to know, how many people are going to order onion rings. What they need to know is every time someone walks in, how much are they going to order of everything on the menu. That's what the small business owner needs to know. Then how much is that going to cost them? Labor, subcontractors, materials, and what they're going to make on that average transaction. Now you're ready to start a business plan once you have that. Okay? Now, we take that along with your vision, along with your marketing initiatives, and a repeatable weekly schedule. Why do you want a repeatable weekly schedule? And I get this from the banks all the time because I see our business plan. They Josh, why do you want to know this guy's repeatable weekly schedule? Well, imagine if I know what his average widget is. I know what he makes on every job. I know what the marketing initiatives are. Now they're reasonable. They're actually going to flow enough leads through there. How am I ever going to do a forecast for this person? In this case, if I don't know when they're doing the estimates. If I don't know how many estimate slots they in, they could have 1,000 leads. They can only do so many estimates. They can only do so many job site visits. So when I'm planning for small businesses and trying to do accurate forecasts, the schedule of the entrepreneur is paramount. And if I don't know that schedule, I'm just making assumptions that could be completely up to lunch. I could have someone who's working 80 hours a week in an organized manner, or someone who's working 4 hours a week, and we need to know that. That's what's going to get us into the path of giving reliable projections for something. Now we move on to the analysis. So, number one, repeatable monthly schedule. Number two is you have to know your personal financial situation and what your average transaction size is going to be before you can start planning for this business. Okay? Now we get into number three. It's the analysis. The minute you start having employees, so you've crossed the threshold from solopreneur to entrepreneur, maybe before, you're going to start need to look at reliable financial statements. So a double entry accounting system, whether that be QuickBooks or Simply, whatever you're using, it doesn't really matter as long as it's a double entry system, and as long as it's done by someone who's giving you accurate numbers. You need to start reviewing your financial statements monthly. When you're a solopreneur and there's very few transactions, you might be able to get away with bank transactions. That's fine. And I'm the CPA telling you that. Bank transactions might be fine. As soon as you start employing someone, you need some sort of professional help if you're not in the field of accounting. You should be getting some guidance there. What level depends on your business and your expertise. Okay? You always look at your balance sheet first. Business owners are always going to want to look at their income statement, at the profit and loss statement. It's exciting. I want to know how much I made. Now, on the balance sheet, what is going to be hiding is all of the anomalies. And if someone can't give you a simple enough explanation on a number, if you don't understand it, they don't understand it well enough. So you need to look at your balance sheet in a comparative fashion. You know, we look at it in our firm usually over 6 months. If we're looking at this month, we're looking at the 5 preceding months as well. You know, at a minimum, look at the last month. And you want to look at the variances in between the items, the assets. You know, what was in cash this month versus last month? What was in receivables this month versus last month? Inventory. Now your assets, maybe you have a truck in your business. Accounts payable, what did you owe people? What was on the credit card? You're looking for the variances month to month. And if you don't understand them, that is okay. But you need to be able to get a simple explanation that you can understand them. And if it's a complicated explanation, it's usually wrong. So you're usually getting the wrong numbers. And if the number is wrong on the balance sheet, when you get to that income statement to see what you want to see, it's wrong too. So the error is high on the balance sheet. You need to be able to understand it. You're going to get to GST payable, and that's a big one. You're going to get offside in taxes. You have to have a plan in place that you're staying current on that. You know, this guy here went from 4,000 payable to 7,000. What if we keep going at that rate every single month? We're going to have some issues in this guy's file. You get over 20 or 30 or 40 or $50,000. You're going to look at a corporate tax payable. He's actually made payments. You notice that it's negative. If you see a negative balance in corporate tax payable, it means you're actually making installments. It's good. Negative liability is good. Okay, that means this guy paid $1,000 towards his corporate taxes. Cheryl alone went from negative 3,000 to 6,000, so he took another 3,000 out of the company. Okay, so it's those sorts of explanations. When you look at it and say, I have no idea why this went from negative 3,000 to negative 6,000. Someone needs to be able to look you in the eye and says, because you took $3,000 in the company. It took me like 8 words. And if it's more convoluted than that, there's a big chance that there's an error here. Okay. Now we get to a bank loan, went from 20,000 to 19,000. Paid $1,000 off. That's why I went there. We get to the retained earnings, which is the earnings over time. Might be a little bit beyond the scope for your non-accounting people here at this today. But it's important to understand these variances between the accounts. So if there is unexplained variances on the balance sheet, what does that mean about your income statement? Might be wrong. That's right. Might be wrong. Now we're getting to the income statement. Okay, this is one of my pet peeves. I call it the wrong way. It's not really the wrong way, it's just I think it's the wrong way. So I see everything organized here, the revenue, the direct costs, and the general costs. So there's some people in the room here knows why I hate this, that it's organized this way. It's organized alphabetically. You guys see that? Alphabetically, it's organized that way. It's not really wrong. I just think it's wrong. I'll show you why. Okay. So now we're going to go to the correct way. The correct way is, you guys see how this is organized here?
Descending.
Numerically descending, right? This guy, the first guy comes into my office sometimes, and I literally have this conversation. It drives me up the wall. And they'll start saying, Josh, I paid $100 in bank charges and interest. Is there any bank that can get me better? Can I get to 95? Can I get to 80? And I start thinking to myself, this is our only meeting. You're going to meet 3 or 4 times this year, and we're talking about interest in bank charges. So, and it's hard. So, because they can, people don't like the banks or don't like the cell phone companies, and they get fixated on these issues that are very simplistic and easy to understand. But if you organize it numerically descending, here's the move. You take a line, a literal line. You're going to draw it halfway down here. You can see I'm drawing it right here. In this guy's business, we got rent. And you say, you spend all of your time, your 168 hours, here. All of your time here. You spend the most time here. You spend the second most time here. You spend the third most time here. And this stuff, if you're bored on a Sunday, or if you got someone to delegate it to, that's where you give that to. Okay? Because all of this together is going to make hardly any impact in your business. But if you miss your mark on one of these, up top, of the stuff that matters, it's really going to matter. Okay? If you're not generating enough revenue, if you paid your subcontractors too much, if the materials for your business are costing you too much, it does not matter what your cell phone bill is. It doesn't matter if you're paying 2.14% and you move to Avalon, you're going to pay 2.05%. It's bankruptcy either way, unless you're focusing your time up at this level. Okay? So what we're going to get to here is we're going to get to the revenue of the business. Now we're going to get to the direct costs. This goes back to your widgets. So these are the costs that vary directly with each new project you do. If you're a baker, it's every new loaf that comes out of the bread. If you're a plumber, it's every new job that happens. If you're building a house, it's every new house. Okay? The general costs, they're really going to stay the same most of the time, depending on what you're doing. There's not going to be a huge amount of variances, not directly with the direct costs. But often in most businesses, your administrative wages are going to be a major factor. Okay? Your advertising is going to be a major factor, and the rent are going to be a major factor. And that's as a business owner where you need to focus your time. So the 3 moves that I'm giving you today is repeatable monthly schedule, is to know your personal financial situation and your average unit costs in planning. And number 3 is the financial statement analysis. Make sure you review the balance sheet first, and then the income statement in numerically descending order, and review the stuff at the top. Spend your time there. And that's what I have for you guys today. If you guys have any questions.
So, well, you already know me, so I'm already in business.
Yeah.
And I know I'm lacking at a lot of this stuff.
Yeah.
What is your process of getting involved with somebody that already is full blown?
Yeah, that's a good question. Yeah, we bring them into our office. We give them a free consult. So they come in. We ask them, what's working in the business, what's not working in the business. We kind of go through our planning process. This was a very simplistic version of the planning process. What happens in our personal financial plan, personal tax plan, what happens in our business plans, and how we're going to look after the day-to-day reporting. So it's kind of a free consult that results in some free advice followed by a reliable fixed monthly fee that we can give people.
What's your monthly fee?
Yeah, the package.
Depends, right?
It depends, yeah, it depends. Starting at $84 per month. Some of our bigger clients are $1,000 per month. Yeah, starting at 84, we like to grow with our clients. You know what? We're all about changing that rate, changing that failure rate. Yeah.
So for a fixed monthly schedule, in an industry that does have a lot of flux week to week, so a lot of us are from the personal training program, and again, the week to week is gonna be, it could be completely different depending on client's schedule. How would you set up something like that where there could be no fixed time that you could have to dedicate to this?
Are you talking about the schedule?
Yeah, the schedule, so like how you have it blocked out for each individual thing, and let's say I have a client here on one week and here not on the next, like.
Yeah, you're what I'm going to tell you is going to be counter to, and you're going to have to go home and sit on this for a while, is you're going to have to turn people away if they don't fit in your blocks. If we did everything according to our client block, and you can conform to their schedule and their schedule, and the same thing, you know, if you have a blank for an estimate or, you know, personal training program, you can do that, but you will never be able to scale it, and you will see, even if it's just a one-man operation, you will see less and less people. Okay, so for example, I do client meetings at 3 o'clock and 5 o'clock, and if someone calls me and say, I want to see you at 4 o'clock, I have to give them both of those slots. Now I have 2 slots tied up for one, right? When you're first starting out, if you don't have enough, your schedule is wide open, you can make that choice, right? But eventually you're going to have to get them into those defined blocks, or you'll end up with one person encroaching on 2 blocks when you could have seen 2 people instead of 1. Right? So that's.
Thank you.
You know, Josh, that schedule is so awesome because I've been in this now for 4 years, and you become so reactive to your customer, and then you're always just chasing after the customer and leading this stuff, and then I'm the guy at 1 in the morning doing the estimates and the invoicing and that sort of thing. So
Yeah, the repeatable monthly. Yeah, the repeatable monthly schedule is what gives you peace of mind. There's entrepreneur burnout. But if you have a repeatable monthly schedule, and even if it's an intense schedule, but you actually know that everything in your business is scheduled to occur at some time, you can actually leave your business and know that it's okay because I'm scheduled to do this on a different day at a different time. Whereas if you're trying to deal with everything when it comes in, you are going to have a hard time shutting your brain off at night with all the things that you haven't done and you don't know when you're doing. So setting that schedule, and it's an exercise. You won't get it right the first time. You're going to have to set it and adjust it based on what works. As you move forward, it'll get less and less change. But at the beginning, it's not unusual to set it, and then 6 months later, you rip it up, and you maybe you see your training clients in the morning instead of in the afternoon, right? You're going to find what works and what doesn't, right? But actually trying to live by that, that's what's the discipline gives you the freedom in a strange way. The discipline of that schedule gives you the freedom to actually, you know, go home from your business or hire someone else to do what you were doing. Because if you had a set schedule, you can hire someone else to do that. You know exactly how long it takes and exactly what you can accomplish. Whereas if you're just trying to do it as it comes in, you're not going to have that sense, and when you try to scale it, it's not going to work out so well.
Any other questions for Rob?
That was good information, Josh. For anyone who is in this room wanting to get into business, what you've learned here today is pure gold. Like, this is what separates the winners from the losers. And being full disclosure, we're clients of Josh, and he has completely transformed our minds and the way we think about accounting and think about business planning. And he's really setting us up for success. And if you guys aren't yet opening a business or you're thinking of it, I would definitely call Josh and just have that consultation with him, because he actually cares about business, small business growing and being successful. So just wanted to share that.
Can you guys join me in thanking Josh for coming today?